right, welcome to the very last section here of working on our certification test prep questions here. So from yesterday's, we went all the way down to 3.2. So now we're going to continue with 3.3. We are quite almost done with all the sections here. So let's try to go through as much as we can. This should be perfect enough for this entire time frame. So let's go ahead and dive right into the finishing up the rest of the certification test prep questions. All right. So again, here, right, for this one, it's going to be recording and managing basic money out. So again, that is looking at that. So again, if I were to go to my dashboard here and go to getting things done, this is the money out section that they're talking about right here, okay? Where you're going to be needing to know how to, where you need to know how to pay your bills, right? And then what does that do, right? You're going to be dealing with bills, receiving, that's pretty much it. Managing your vendors and your 1099 workers. Okay, so making sure you understand the flow of how money out works. Now remember, there are three types of entering in a money out transaction. So if you remember, right, if you click here, you have three options. You have either an expense, you either use a write a checks window, or you enter in a bill. Now, if you choose to use the enter bills function, you have to remember you're creating an accounts payable. So therefore, you must use the receive payments window to reduce that accounts payable. But everything else is straightforward, right? So we'll dive into what those three things are and what you need to know in regards to the difference to them. But that is what we're looking at. There is the basic functions of the money out. So describe the money out transactions workflow. So again, we said you had three options, right, to pay for things, right? Three options to pay for things, right? Or in this case, yeah, money out. To spend money, right? Okay. And okay, so we talked about the three things, right? Those three things are, right? Using the expenses window, right? And then we have the checks window, and then we have the bills. Okay, so again, expenses. How do we pay for expenses? So remember, when you are making a payment to a vendor, right, the idea is there are two types of vendors, right? You got your credit vendors and you have your cash vendors. Your cash vendors are going to be using when you pay things at time of purchase. So you would normally be using either or an expense or a check, okay? Where for your credit vendors, you'll be using your bills, right? Because you're not going to pay now, you're going to choose to pay after or later for the at time of purchase, right? So you're going to be ending up owing the vendor. So again, let's talk about the expenses. When would you use expenses, right? You would use expenses when you pay with cash, credit card, EFT, right? So if you're using Zelle, Venmo, Cash App, whatever, you can also use this if you're transferring from account to account. But in this case, usually you would do this if you are using a cash credit card, debit card, okay, a manual check book, okay, as in like if you had a physical hard copy of a check that you received from your bank and you're writing them out, that's when you use the expenses tab, okay? All right, so let me get to pay vendors at time of purchase, okay? Now, checks. When would you use a check? In this case, if you choose to use the option where you are using QuickBooks, right, to print out checks, right? So as in like you can sorry, excuse me for my typing here, to print out checks, right? So again, you have the ability to order treasury checks. They have to be the legitimate one, the one that has like the holographic imprint on it, or in this case, if you look on the back of your check, it should be like this dotted gray type of paper. That is a legitimate treasury bank note, okay? That means that one is the official check that is usable through all banks, right? That comes from an actual bank institute, right? So it's important that you know the difference, right? You don't just go download or print out on regular cardstock, right? It has to be that special paper. And then so you have the ability to write and cut checks whenever, and you have the ability to print them out and send them out. So an often type of check that you would commonly print would be your paychecks, right? But in this case, if you're choosing to use QuickBooks to print out those checks, that's the only reason that you'll be using the checks window, right? To pay for to either pay your vendor. That's it. Right, whether it's at time of purchase or whether it's you're just paying for things. Okay, paychecks or just sending money out. Right, you don't have to have necessarily a purchase or anything. Right, you could just write a check for just to write a check. And then bills, right? You enter bills when you owe money to a vendor, right? Hence, accounts payable, right? So let's talk about the accounts payable workflow, right? If you enter by entering in a bill, you need to know that you are increasing accounts payable, which means you are increasing your amount that you owe. Now, in order for you to decrease that, you have to create a bill payment, right? You cannot use write-a checks. because bill payments will decrease accounts payable. And decrease your checking okay, or whatever form of payment you used, right? Or increase credit card, right? If you use your credit card to pay, right? Now, you just have to remember do not write a check or expenses to pay for bills. That is something you have to remember because QuickBooks will not associate will not associate will not associate or link this payment to accounts payable. Okay. And then also you are entering expense slash purchase twice. Okay, so you want to avoid doing that. Okay. All right, so that's the workflow there. Now, of course, once you write your check, then that money just gets taken out as soon as, right? So on your books, it will be taken out. It will be taken out of your checking automatically. However, it is up to the person that you wrote that check out to, whether they deposit that money in their checking account or not. So make sure you know it's a two-part thing, right? Just because you write the check, that doesn't mean it leaves your bank right away, right? Especially when we have to understand that when you write a check, right, it has a 6-month holding period, meaning that person can cash that check out anytime between 6 months or from now, right? From the date that you issue it. Now, another thing too is you also have to ensure that you do your accounting accurately by running your bank reconciliation to ensure that those people who receive those checks actually cash them out. Because again, you have to know where your money is going. Yes. Question.
Okay, depending on what type of bill it is, can you do it to have it direct deposited?
It will depend on what you're doing here. But if you're trying to set up an auto payment, absolutely, you can definitely do that. Again, that was one of the automations things that we were talking about, where if you are going to have, let's for instance, right, you have an internet bill, right, and instead of having to well, you would still record it because it will be an expense to your business. However, yes, you can set up auto payment so then those things clear out automatically, so it gets taken out of your checking account automatically. But you also want to
Okay.
be very careful with that too, because again, if you're not checking your checking account on the daily, and and even though yes, that usually that is something that would be taken out of your checking account every single, you know, specific day of the month because you're scheduling it the auto payment to take out, it's still your responsibility to record that payment, right? Even though it's going
Right.
to be auto paid, right? Or for
Right.
you to up to make sure that you ensure and authorize that has gone through. But yes, you
Okay.
can set up auto payments. Yes, correct. To be taken out from your checking account automatically. Yes.
Okay.
Mm-hmm. All right. So that is that there. Okay. In this case, yes. So after you write your check, you mail it out, you send it out, or you already paid the vendor, right? There's nothing else to it except for just you managing your checking account and making sure that those checks clear. And we will do that through a bank reconciliation. Okay, so we will talk about that in a few seconds here, or in a few minutes here, as we go through the questions. Okay. So it says that identify the types of money out transactions, right? We already talked about those three right here, right? So that's that question. Let me move this question over. Okay. Okay. So let's see. It says we're here compare and describe the appropriate use of checks and bill payments. I just talked about it right here. So let's see what the next question is. Describe the effects of recording bill checks and credit card transactions. Describe the effects of, okay, so the effects is um, if you record a bill, right? What does that do? It increases your accounts payable. So this case, I've already described it here. Now let's actually describe what happens when you actually use a the expenses tab, right? So again, if I'm going to be describing that, oftentimes you would use the expenses tab, right, to pay for things that are at time of purchase or expense, right? So in this case, you would be increasing your expenses, right? At the same time, you are decreasing. If you wrote a check, right, you're going to be decreasing your checking account. Checking if you used cash. Debit card, EFT, and check, right? Or you would increase credit card if you use a credit card to pay. Okay, so credit card, once again, you then, if you're using your credit card, what is the assumption here? You're going to be owing the credit card company now, right? Because you have to pay that money back. Okay, so that's the effect there, right? And this is going to be the same for your check as well, right? If you have a bill, usually it will be an expense or a purchase or whatever it is. And if you're going to cut that check, it's going to come out of your checking account. It's going to decrease your checking account. Okay, so there's the effects there. Okay, so let's see what else we have here. Then it says describe the effects of recording bills, checks, and credit card transactions. We already discussed that over there, right? So then it says differentiate between expense transactions and bank transactions, okay? So we talked about this, right? expenses, okay? Expense transactions are used when you purchase or what do you call it? Incur an expense, so such as rent, right? Right? And you pay at time of purchase slash expense, right? Right? And that will trigger you, right? To pay with cash, credit card, EFT, check, right? But if you're using the bank transaction, right? That means, or in this case, the write checks window, right? You're strictly only using your checking account. Okay? So in this case, the difference between them is the expenses that you have the ability to use credit cards to pay for those expenses. Where if you're doing a banking transaction, it's going to be strictly from your checking account. Okay? And then I'm going to go ahead and put in parentheses, write a check. Okay? Next one says describe how to record checks, credit cards, and debit card transactions. So once again, how do we do that? Right? Straightforward. We either go plus new icon, right? And you could choose between the expense, write checks, or bill payment. Okay. Other ways that you can do that too is by going to your expenses tab, right? Or expenses center on left navigation bar. Right? And then go to expenses tab, and you'd be able to enter new transaction there. Okay? And of course, you can also go to the vendor center to also insert a transaction there as well. So what am I talking about? I'm talking about going here on the left side, okay? Going to expenses, and then going to expenses here, and be able to enter in a new transaction here. So this allows me to enter in a bill, it allows me to enter in expense, and it also allows me to write a check. And it also allows me to pay my bills. Okay? Okay? I can even pay down my credit card if I wanted to. Okay? And then every single one of these, you'll have the ability to either view it, schedule a payment, make a payment. Okay? Right? We use marked as paid to do that. So in this case, this is all chapter 4. Okay? Describe the use and the effects of vendor credits and refunds. So again, when would we use a vendor credit? versus a vendor refund? Okay. A vendor credit, what does it do?
It decreases the amount that's owed.
Correct. It decreases your accounts payable, right? And while your refund it doesn't, you already paid for it. So paid for purchases, right? And you're simply just getting a refund. Money back. Okay? So again, when would you use a vendor credit? This is if you have a discount terms, right? You would use the credit, the vendor credit here to reduce your um, accounts payable. You can just receive a random credit. So for instance, you say, right, you purchased, then returned, and use credit for future bill. Okay, that is what that random credit is. You can receive one if you overpaid. Okay. But in this case, the refund is pretty straightforward, right? If you return the product, if you return products, right, and you already paid the money, is basically the money is going to go back to your credit card or they're going to send you a check. That's the only thing, okay? If you return products and have paid, vendor will credit your credit card or they'll cut you a check. So again, that's why if they're gonna be putting it back to your credit card, we have that credit card credit, right? It's to refund your credit card. Right? You also have the ability to pay down your credit card, right? By going to pay down your credit card, right? So if you enter in a bill from your credit card company, you can enter transaction to decrease that credit card balance. Okay. Okay, but that's not part of the vendor refund or anything, but this part is, right? The credit card credit. Okay. Describe why and how to void, delete, and edit money out transactions. So again, you have the ability to edit, delete, void your transactions, right? And how it impacts the transaction. Okay. Hold on. New. Used to refund back to your credit card. Okay, so here, right, what does voiding What does voiding a check do? Right? Voiding a check will zero out the transaction and undoes it, right? Undo the payment and checking, right? Because it's zeroed out, right? So if you void a check, it usually zeroes out the transaction and it reverses everything, right? If you choose to delete, which is not recommended, right? Yes, you can delete transactions 100%. You just can't delete items or people or products and services, right? Anything that's a list, you can't delete. But transactions, of course, you can 100% delete, okay? Deleting is a problem, okay? Because what does it do? It literally just puts a gap, right? It puts a gap in your transactions and it pretends as if the transaction never existed and gets rid of the information. Now, again, why is it so dangerous to delete? Because this can affect more than one account that is involved in the transaction. Okay, so again, if you decided to delete a bill payment, that affects your accounts payable, that affects your checking account, and that affects the expense item that you generated, right? So you're making sure that if you are aware that if you choose to delete a transaction, it can be very messy. It could lead to much more difficulties trying to fix your books in terms of that, right? You could have problems, okay, in your book or in your accounting book, right? Because in this case, right, that's why they recommend you try your hardest not to delete. Okay. Okay. That's why they encourage you to try your hardest not to delete, but edit the transaction instead, right? Right, because in this case, if you need to fix numbers, right, that's an easy fix, right? Right, and of course, when you have the ability to edit the transactions, you can take off accounts and you could do this. Just make sure that the numbers are matching. Okay. All right. Okay, so that's majority of this one. Again, I would definitely exhaust all your options here. So again, understanding. So this is chapter 4 and chapter in this case this class I called it 5.1, where you're looking at vendor credits, vendor refunds, and so on and so forth, right? Making sure that you go through that and why you do it and what and et cetera, et cetera. Okay. All right. Next section here is bank account transaction rules and receipts here. So 4.1, okay, implementing financial accounting connections, okay, meaning, right, connecting your bank to QuickBooks Online. So again, identify the types of financial accounts Intuit QuickBooks Online can connect to. What did we say? We said you can do any banking, any bank account, any credit card account, right? Any cash, any what do you call it? Any application, right? Such as Cash App, right? Venmo, PayPal, okay? Because all of those are gonna also be considered your way that you receive money. So you're gonna have an account with them, right? You're gonna have some kind of source of money flowing into those accounts. Okay. So again, once you connect your financial institute or whatever kind of account that you have there, you're going to create a bank feed. Okay. It's going to give you bank feeds. Okay. And that's where ultimately you'll have your banking center where you have the accessibility to access all of these accounts in one area, in one banking center, and you're able to either record transactions directly into QuickBooks. You can even make payment if you're using your online mobile banking. You're able to make payments using the banking, the the online payment. You can even manage your credit cards there too, right? And you can even manage all of those little mini apps you have down there, right? So again, gives you the easy feasibility of accessibility in terms of having all of your accounts all in one place. Okay? Describe the benefits of connecting Intuit QuickBooks Online to accounts. Well, there's a lot of benefits to that, right? One, right, since you have the banking center, you'll be connected to bank feeds, will give you notifications in notifications from your bank. It allows you to here, let me you'll get notifications from the bank, right? If there is any non-sufficient funds, right? A bounced check, right? They'll give you all those notifications. Overdraft. Okay. Other things that you'll have there is the ability to use your bank account to transfer money, okay, or make online payments directly, okay. You're able to also have the ability to import bank transactions, right? And this one allows you to save time, okay, from entering on the daily. Now, again, not recommended to use because then you are going to, because your checking account should be the number one thing that you want to keep a good and close track record for. But if you're making online payments left and right, you have subscriptions and things like that, that is definitely going to be useful for you so you don't have to manually enter that in, right? You could just import a data a bank statement, and that should be able to input all that information in there, so then you are able to import it. So we know we've already seen this process before in chapter 6, right? When you import the data, you're going to go through the review process to categorize your transactions. So again, I'm going to put this in parentheses. Review chapter 6. Okay. You see, you get live notifications. You get to use your online mobile banking app to go ahead and do your payments, transfers, and whatnot. So you get a lot of things that you can do, right? And you get the instant ability to import your bank transactions. So that's why that's a huge benefit for connecting your bank account to QuickBooks. Okay. All right. So in this case, you want to explore the chapter 6 here for anything that has to do with your banking transactions there, okay? Right? It's the 4.2 managing bank feeds. So guys, process bank feeds transactions, and then of course define and describe the use of bank rules. So again, your bank feeds transactions is going to be exactly what I had up here. This is going to allow you to view your bank accounts, receive bank notifications. Okay. So in this case, because we weren't able to explore the bank feeds because we don't have a real account to put in, go ahead and read that section in chapter 6 about the bank feeds. Okay. Now it says right here, define and describe the bank rules. So again, this is talking about the review process when importing bank transactions. Okay. Why is it so important that you set these rules? Rules, okay, allow you to automate actually let's change that. Allows you to automatically recognize a transaction, a bank transaction. Okay, so rules allow you to automatically recognize bank transactions and categorize them for you automatically. Okay. So the example we did was setting up vendors, which accounts are associated with the transaction, right? And coding which class slash location by recognizing a short text, right? So if you remember that process of doing rules, you had to set those rules up to automatically recognize the transaction, to automatically categorize it for you, right? So in this case, yes. Okay. So if you don't remember that, that was fairly recent. That was last week on Thursday for the bank section for chapter 6. Okay. Managing receipts. Identify the methods of uploading receipts. So I didn't actually talk too in depth about this section here, but yes, you also have the ability to upload receipts. So what does that mean? So for instances, when you're on the go, right, you have the ability to upload your receipts by taking a picture, scanning a document, and uploading a transaction directly into QuickBooks. So that means if you decide to go shopping, right, and you bought some office supplies, you have the ability to upload upload that picture of the receipt, right? And that will automatically help you save some extra time there by entering those receipts. It will help you create that expense for you, so you don't really necessarily have to punch in everything in, right? Now again, when we say easy feasibility, that means you have the ability to download the mobile app and be able to take the picture of the receipt right then and there and upload it to your actual company file. Now again, this is to teach you how to use the website, not the mobile app. So again, the mobile app is going to be very similar features, but you have to know the formatting is a little different, right? But in this case, yes, you can be able to use the mobile app to be able to take screenshots, snapshots, pictures of receipts and upload them directly to the QuickBooks company file, right? So you have that easy ability to do so. So that's the importance of importing receipts, because it allows you to save time once again. Instead of you putting in that transaction manually, you just snap the photo and it should be able to detect the text and be able to create the expense for you. So again, I didn't talk about this section either, but in this case, you're able to read it through chapter 6. Okay. And then it says right here, describe how to record transactions from uploading receipts. Again, I just said this. Okay. So it just depends on how which method you're going to be using, but go ahead and read that section there on your own. Okay? So let's see. I'm going to go ahead and let's go ahead and take our break now. Okay, and then we'll come back and finish up the rest, okay? Okay, so right now it is about